Okay, cool. And I think we're live. So hello everybody. Happy Tuesday. It's bright and early in the morning here in the East Coast US. And this is one of the last workshops that we're doing for the Grants Round 10 hackathon. So if you guys have been around for a while now, we just wrapped up Gitcoin Grants Round 10, where we saw over $1 million in community donations on top of the matching pool that we're giving out to projects and public goods in the Web3 space. And we do a hackathon alongside it, and that is wrapping up, I believe, tomorrow. So just over a day left. And we're going to be talking a bit about IOSG Ventures here. They have some bounties in the event. They're running a big Kickstarter incubation program. And then I'm also here with Aidan and Kain from Synthetix and ChainSafe, who are going to just contribute to the conversation a little bit about, starting projects in the crypto space, what it's like to lead a startup. And yeah, we're just going to ask some questions and have fun. So before we dive in, Xinshu, do you want to give a quick introduction and say hello?
Sure. Thank you very much, Connor, and thank you for the Gitcoin team for putting all these things together and making it happen. And thank you everyone for joining today's workshop. So my name is Xinshu. I'm a partner at IOSG Ventures. Today we have a very extraordinary lineup, I would say. Connor from Gitcoin, you have already seen, and Aidan, co-founder and CEO from ChainSafe, and Kain, founder at Synthetix. And we are going to discuss, I think, a very interesting and important topic on starting new projects in the crypto space. So a little bit of my background. I'm currently doing investment at IOSG Ventures, but before that, I was myself actually a founder in the space. Actually a developer turned founder. My first project I started was Zilliqa, a layer 1 protocol. And then I started another project, RockX, for Bitcoin mining and proof of stake validation services. So even during my entrepreneurial journey days, I realized that it would be much more helpful if I could speak to founders in the same space and get thoughts and advice from them. So that's why we are co-organizing this event with Gitcoin today. Hopefully we can bring in some good advice, good tips for you to learn from. And what we are going to do today is very simple. We are going to have two parts of the workshop. The first part is that each of Connor, Aidan, and Kain will speak for 5 minutes. They're going to talk about anything they like to share with developers and founders. It could be a personal story in their entrepreneurial journey. It could be some tips they want to share. It could be pitfalls they want all of you to be aware of. Or it could be just, advice on how do you start managing people, managing business. It could be anything. And then the second part after that will be just a panel discussion. And, all of us are going to delve a little deeper into some of the very practical questions, I would say, in the journey of starting a new project. Okay, I'll start first by just sharing a little bit about IOSG Ventures, who we are, and how do we work with developers. And I'll make sure that I'll keep it very short. So we are early stage venture fund. We invest in crypto and blockchain projects. So for example, ChainSafe and Synthetix are some of our proud portfolio projects. And we love working with developers. We want to work with them throughout their journey, but also as early as possible. So that's why we are sponsoring various events in the developer community. For example, for this round of hackathon, we are sponsoring a few bounties ranging from cross-chain solutions to user-friendly interfaces and to financialization of NFTs. And then recently, we also started a program called the Kickstarter Program, which provides full suite support for early stage founders. It certainly provides smart capital. We don't set terms. We'll just give you some initial money, and then you can get started without worrying about things like terms, lockup, or even valuation. But more importantly, by doing that, we can start working with early stage founders and developers immediately, providing all kinds of resources and support, ranging from, let's say, brainstorming with you on designing your incentive schemes for both your internal team and external community members. Also in terms of, let's say, bringing our other portfolio projects to forge partnerships with you when your products eventually will launch, right? So any kind of support that's needed, we'll be able to provide. So that's through our Kickstarter program. I think it will be a very interesting platform for early stage founders who just got an idea, but but are still thinking about, finding a team and making plans, setting up priorities. So I think that's the time we should talk. So, feel free to reach out to us if you have any interest. I think I'll just pause here first. I'll let Connor speak for around 5 minutes, in his view about starting new projects in the space. Connor is a revenue lead at Gitcoin, and he's been very helpful for not just this hackathon, but in general the developer communities. Connor, please.
Yeah, thank you so much. So I guess I've some background on myself. I've been in the blockchain space for a long time now. I actually started at Consensus in 2015 when that was still like an early stage startup, which has grown quite a bit since. And been working on Gitcoin now for a bit over 2 years. And if you guys didn't know, so Gitcoin was a project incubated within Consensus. We very recently, actually a few months ago, raised our first funding round, spun out of Consensus into our own entity, and have since kind of, we just airdropped a new governance token for Gitcoin grants, and then we're working on a few other things that are coming in the next few months as well that are going to be exciting. But yeah, so my experience, I mean, I've worked on a few different kind of startup like projects, some that have succeeded, some that have not, and I guess I don't even know where to begin. I mean, it's often exciting, kind of trying to start a new project in the space, and I think there is so much potential in the blockchain industry that's still untapped. That there's still room for like so many new projects to take on new use cases, or at least, start new ideas and be successful. And with Gitcoin, so we're kind of in a position where, we're trying to incentivize and like support these new projects, not always with, investment and like seed funding, but often like mentorship and, like initial, maybe like grant funding. So not necessarily investments, but just, getting them some money to get started on a project. What we're most known for in the space is probably like Gitcoin grants, which is this mechanism. We use quadratic funding to help get a matching pool of funds and distribute it to projects and public goods in the space that haven't yet raised external funding, in a democratic way where the community gets to share their input on what they want to get funded. And so we've seen a lot of pretty successful projects actually come out of that. For example, I mean, these projects didn't necessarily start on Gitcoin, but like, Uniswap, 1inch, Mask, we have a lot of projects that kind of were in the early days of Gitcoin grants, getting some funding from the community, that have since, either raised a seed round or done a token or something like that, who are now actually, giving back to the Gitcoin matching pool and putting money in to help the next generation, the next round of projects start. So yeah, I guess, I think we'll get into this a bit more later on the session when we kind of go through some questions and stuff. But it's been really cool to see, the projects that have started, through Gitcoin grants or even through hackathons. So we've seen a lot of projects that, maybe just they're just like a little hackathon project, building like a proof of concept or, an early stage idea, working directly, with like some of the sponsors that we bring into these events. That actually end up, continuing work on that. So they either, start working directly with like the sponsors who are funding the prizes, or, they just decide to open up a grant and get kind of, funding directly from the community. And so that's kind of our goal is, not just to run hackathons and events and, kind of have people work on something for 2 weeks, win a prize and like ditch it and forget about it. We really want to incentivize people to, start something that they're passionate about and continue working on that project and get continuous funding on it. So yeah, that's kind of our goal at Gitcoin is to, fund developers, to fund open source, and help start, this next generation of projects in the blockchain space. So I guess I'll stop there. I think we can dig into it more a little bit later, but yeah, Kain or Aidan, do you guys someone want to go next?
Sure. Yeah, I can go. So yeah, Kain from Synthetix. We're a derivatives protocol on Ethereum. Some of you guys may have used us before. I think my focus at the moment, when talking to early stage teams, is really around kind of the initial capital formation. Like, how do you go from you've got an idea, some people are interested, you feel like this is something that the market wants, or the market needs, or people are going to be willing to pay for, or really going to want to use. What's the next step from there, right? And I think for a lot of people, particularly someone coming out of a hackathon, who may be very engineering heavy, maybe really gets like deep in the space and understands Solidity and Web3 and all of that stuff, but hasn't necessarily had much exposure to capital markets. It can be a little daunting to raise money, and I think it's daunting for everyone, right? So it's not something to be afraid of. It's always a challenging process when you go out and say, hey, I've got this great idea, give me some money to go out and scale it up. But there's some things that I think you can do to make your life a lot easier and to kind of align with the direction that things are going. And so I published an article last week which talked about this idea of DAO first capital raising, essentially, right? So the idea is, instead of going out and forming a company or creating like an open source software foundation, like a lot of us did, back in the day in 2016, 2017, 2018, you go and just spin up a really simple DAO. And you say, okay, we've got some people who are going to contribute. Maybe it's engineering, maybe it's, some marketing support, maybe it's going to be capital. And we're going to take those initial inputs and we're going to create a really small, light touch, simple DAO. And then around that, we're going to, go and bring some initial sort of seed capital into the DAO. And it might be only a few $100,000, just enough to kind of kickstart things and get you going, get some momentum, and you can really build out and test the idea. And then from there, you can start to add layers of complexity. So, rather than trying to start from something that's fully formed and you really understand and, is totally, locked down, you start from really small components and build out and add complexity over time. And so there's a bunch of projects that have done this over the last sort of 6 months. So Barnbridge is a really good example. Alluvium, Spool. There's a number of others that have kind of successfully started from this idea of not going out and raising equity or going out and doing a SAFT or something like that. They just say, got a DAO, put some money in, you're going to get some governance rights over the DAO, and then we're going to start building it out. And I think that gives you a lot of flexibility later as you start to kind of identify what this thing is going to be, right? Some things are going to be the next Uniswap or the next Compound or Aave, and some things are going to be, maybe a more niche product that, is used by engineers or used by some projects, or more kind of B2B style thing. And it's hard to know at first what that's going to be. And so you want to give yourself as much flexibility and sort of leeway as you can when you're starting things off. And rather than going out and raising a big round and kind of locking yourself into this VC pot or whatever, you can raise a small amount of money and kind of scale it out. And then I think the second component there is governance. So ensuring that from the starting point, you have a legitimate governance framework that is going to scale as the project hopefully grows, right? And the thing that I've been advocating there has been this idea of sort of setting up a representative democracy where all of the stakeholders are voting in a small council. It might be 3 people, might be 5 people, might be 7 people. And there's a number of advantages to doing that. One of the advantages is that direct token holder voting has some issues in terms of voter turnout. Even if you've got a small community that's really passionate, it's still hard to get them all to turn out and vote, week in, week out, right? Day in, day out. And so creating a system where you appoint, 2 or 3 people that are voted in by your stakeholders, whether they're token holders or early community members or however you do it. And those people have a sort of legitimate seat within the protocol to make decisions. And there's all kinds of decisions. And it's funny, I was talking to a project today, and the founder was like, oh, we're going to do this. And I was like, who's doing it? Who is we? And he was like, oh, well, us, like the engineers, this is what we want to do. And I said, okay, but you've got other stakeholders, right? Have you talked to them? What's the input to this process been? And he's kind of like, oh yeah, that's a really good point. And I think it's something that we kind of forget sometimes, that we're rushing to kind of do stuff, and there's so many things we want to do, that if you start from a position of like a really legitimate open process with its collaborative, that you build a lot of buy-in, and the community kind of gels around that. And so I think those are the two important things that the DAO first model gives you. It gives you the ability to be really flexible in how you raise capital, and not lock yourself into a specific path. And I think it gives you the ability to set up a really legitimate and open and transparent governance framework from the beginning that can then grow with your project and mold to wherever the direction it goes. So yeah, there's more information in that article if you want to look it up, but that's kind of the gist of it.
Yeah, that sounds great. I think we can certainly delve into this topic a little bit further once we go into the panel discussions. Aidan, you want to speak as well?
Yeah, for sure. Well, thank you for having me today. When we were backstage, I was still a little bit tired from walking to the office, but yeah, thanks for having me today. I'm really excited to be here, though I might not be necessarily showing it. Not that it's that early, but still. So yeah, I'm really excited to be here to chat, and it's been great to hear what the rest of you have to say. I think we're kind of hitting an inflection point right now where there's so many ideas and people need so much help in realizing those ideas, and there's just so much information overload that people don't really know where to start to kind of legitimize ideas. So I guess to introduce myself, my name is Aidan, from ChainSafe. We're a 70-person blockchain research and development firm, and we work a lot with layer ones and dApps to basically build out infrastructure, whether it be development, research. We have a couple of our own products, ChainSafe Files, which allows you to basically have a standard traditional cloud storage application, but on top of IPFS, and Filecoin, as well as the ChainSafe Gaming SDK, which allows you to bridge any Unity game with, I think it's 8 or 7 blockchains that we support, and any type of wallet flow. It's non-custodial, it's non-blockchain specific. We're not trying to sell you a token to use it. Just build your game, build your ecosystem, and go from there. So yeah, enough shilling, more talking. So, I mean, the thing that I love most about this space is the excitement, but I also think, and I guess the hype that comes with that, but I also think that that's the biggest detriment when we see incredible passions kind of coming out during these market cycles. It's also inevitable that things will maybe stagnate or not be in the news. And so, it is inevitable that people might kind of pull out. And a term that's kind of used in the more traditional startup world with companies that are aiming to be 100-year-old companies is a phoenix. Obviously, that's not something to necessarily consider in our space, but I think, to impart any kind of lesson to new startups, I'd say aim to be a phoenix, aim to be someone that can, burn up and then rise from the ashes, because the market cycles will hit and you're going to need to be ready to respond, both from a pragmatic perspective and forward-looking perspective, but also from an emotional perspective, right? I mean, it's going to hurt when those things happen. So be prepared, and don't just aim for, continual growth in our ecosystem. There will be these cycles. Now, in the long run, if you have a 5-year kind of map, you won't feel anything, and they'll all just be blips that you'll wear with a badge of honor. But be prepared, and don't just think that the world is going to be handing out money forever. So, does that mean utilizing a DAO first model, Gitcoin grants, some kind of fellowship or early stage programs where, you can be connected with a community, where you have more of an ecosystem to help you through those kind of turbulent times? I'd say absolutely. That is exactly what you need. You need more than just, you and a blank check and just the world against you. That's not the community we're in. That's not the world we're building. And so focus on community, focus on creating an ecosystem around an idea. And I think the rest will work itself out when times are tough. I guess I don't necessarily have too much opening words, so to speak, but happy to dive into kind of things as they come up.
Thank you, Aidan. I think it's a timely reminder to us, very refreshing. I guess now we can enter the panel session. I actually prepared some questions for all of us, but I guess we don't have to strictly go by the script. We can just keep it open-ended. I think we can probably start by addressing the elephant in the room, which is fundraising. Right? Several of us mentioned some aspects of fundraising. I think one common question, probably one of the most frequently asked questions from our experience from founders in the space, is that when should they do a proper fundraising, right? So let's say this is beyond the initial grant they may get, from Gitcoin or from some of the foundations, but now they want to do a proper serious fundraising to plan for the runway for, let's say, 2 years or even 3 years. And there are quite different practices, I would say, to do this. Sometimes people will do a pretty large fundraising even when they are just at the ideation stage. Sometimes, projects would emphasize that they need to have a product ready before they will do a serious fundraising. So I'm just curious to hear, from the rest of the panel, what are your thoughts and what are your suggestions to founders who are wondering about this? Maybe one of you can start.
I'll start quickly. You mentioned, either having a product first or fundraising first. I think, and Aidan can kind of touch on this a bit, but it's community first, right? Is building up some form of community, whether you have a full production ready product or not. Is having users, having people that want to support you, work on your project, use your product. And building a community first is really powerful, because then whether you go for traditional VC funding or build some type of DAO or some other funding mechanism, you have people there that are willing to support you, help govern, make decisions, and that's kind of what I think we're seeing in this current kind of DAO renaissance here, is that a lot of people are focusing on community first, and the fundraising comes later. But that said, we're in this period right now where, we're in another bull market cycle, in crypto where, VC money is flowing, and, it's not, there's a lot of liquidity and a lot of people are raising money. And if you are going to go that route, I think it's really important that, you plan out for the cycles, like Aidan was saying, and maybe these aren't 100-year cycles yet, but I'd even call projects that, have stuck around since 2016, phoenixes of the crypto space, where they survived the 4-year this cycle and the bear market, and really trying to build up a treasury of some kind, and plan for some type of down period is important to kind of make it to the next cycle.
Yeah, I think that's a very interesting suggestion, I would say. Build your community first. But can you just elaborate a bit further, Connor? Because sometimes people would also ask the question that before the product, what are they supposed to do for the community, right? They can't just keep talking about, I'm going to build this, I'm going to build that, and people will be really losing their patience. So what's your advice on this? Before they have a product, what kind of engagements would be encouraged?
Yeah, I mean, it depends on the project, right? Some people are building a community of, builders or designers that are there to, that want to contribute and help. Others might just be, writing blog posts or, being active on social media, or building a Discord where even if, you don't have a full product released yet, people are excited about what you're doing and either want to use it, want to contribute, want to be a part of it. But it is kind of like a chicken and the egg problem with, product and community. And it's hard to know, which should come first.
Right. Yeah. Thank you. Can you have anything to add in terms of timing of fundraising? What's your advice?
Yeah. I mean, I would say if you're someone who's in this hackathon, right, and you think you've got the seed of an idea, that's probably sufficient, right? That's something that if you believe that the market is going to respond to this, and you've got, some code, or, you've got something that's working, and maybe it needs a lot of work to kind of expand it out, but you've got that initial component, you can start a Discord off that. And there will be people that will be interested in whatever that is, right? If it's, some cross-chain bridge or messaging system or, options protocol, whatever the thing is, there are going to be people in space that are going to be passionate about that. And if you get into your own Discord and you're there and you're engaging with them and you're talking to them, those passionate people will respond to that. They'll respond to your passion. And I think that that's what can kind of ignite that initial early community. And then from there, the rest of it is just about going through a process, right? You get to a point where you say, okay, we need a little bit of capital. We want to hire a couple of engineers or whatever. And one of the things that I do like about where we're at now, in spite, yes, it is a bull cycle, big raises and stuff, but realistically, we're seeing much smaller experiments play out. We're seeing smaller raises, 250 grand, 500 grand, $1 million raises from teams, not teams coming out of the gate and raising $150 million for, a white paper. So I think that gives a lot of flexibility. It allows you to kind of really test and iterate and see, without going all in and committing yourself to the next 100 years. You can commit to the next 6 months and see if you can kind of nail that. So I think that for the people on the other side of this screen who are, in a hackathon and have a good idea, that's kind of the playbook, is like, see if there's a response, see if there are people in the community that really like what you're doing. And then from there, you can kind of start to raise capital and do the next steps.
That's great. So, I mean, if I understand you correctly, there are two keywords I hear. One is like basically agility, being agile, right? Not thinking about raising $10 million in the beginning, but a small raise. And then second keyword would be just do quick iterations, raise a small amount of capital, and try to see whether that will work. Be experimental. Yeah, that's really helpful. Aidan, I want to hear from you as well. What are your thoughts in terms of timing of fundraising? But on top of that, I also wanted to hear your thoughts in this form, let's say, a self-funding of projects, because I think you guys really incubated some of the very interesting projects, largely speaking in-house, without having to resort to external investors, right? Wanted to just hear from your experience as well on that.
For sure, yeah. I mean, I appreciate you mentioning that. Yeah, for us, we're Canadian. We're from Toronto, so things like just throwing an idea at a wall and getting money for it never even crossed our minds. For us, it was bootstrap, like real principles, real basics. And in our line of work, that kind of was just a natural thing that kind of had to work. Not many VCs were interested in a blockchain research and development firm building open source, alternative implementations of blockchains.
We are interested for sure.
Yeah, I appreciate that, but not very many people could really understand what we're doing or why we're doing it or what the vision is. And maybe that has to do with storytelling. Maybe that has to do with just, I think, this kind of feeling in the space that, if we're going to invest in this risky industry, we want to really be risky, and there has to be a token for that to be the case. But yeah, so that was one for us. So, we definitely didn't go the route of having an idea, raise money, and then realize that idea. We really did prove it for years before we got to that place. And yeah, I don't think that that's for everyone. And that's actually, you read anything about startups and that's the opposite of what you're supposed to do. You're supposed to get money and realize whether or not an idea has legs. So I don't necessarily recommend that route for everyone, but I also do think that there is a huge potential in the quick iterative kind of cycles that, allow you to release something, see the response. And at the same time, in working and mentoring at different accelerators, something people don't realize is, you put out, your valuation, put out your your ask basically, and people come back to you and tell you, we're actually thinking more at this valuation, and people still think, that they need to do the whole round at that new valuation or something like that. Don't raise what you think you need, raise what you really need. And again, that's not normal advice. You're told to raise more than you need, but I like to think if you're going to raise enough to get you to a place to then potentially be able to raise more. If you have confidence in where you're going. Obviously, you're told everything costs more, raise more than you need, and all of these things. But a lot of the time, those kinds of lessons that you read in books are coming from venture capitalists that maybe do have a lot of experience in working with a lot of early stage startups, but that just wasn't what we needed. If we would have raised 10 times more than we needed, it would be a very different governance for our organization. I would say raise what you need. We also have a community of people, as Kain's been talking about this whole time, that are ready to kind of get behind ideas on an individual level. So, you have a lot more immediate maybe feedback loops than you would in the traditional world where, you're building this thing and you don't even know if anyone's going to ever do anything with it. With us, it's open source. You can, have people talk to you directly, tell you it's garbage, tell you it's great. And that feedback loop is priceless. So I haven't really said too much in terms of firm. I've been talking very vague, but all I can do is say what's worked for that, what has worked for us. And if you ever want to talk or bounce ideas, I'm here to chat.
No, I think it's great. Basically, your advice is that teams should raise only for what they need. And then the purpose of that raise is really to better prepare them for a much better, execution in future, right, where they could potentially raise a bigger round. And thank you very much for that.
Which maybe doesn't stop you from needing to have to raise again. So, a lot of people want to say, hey, let's not even think about this for 3-4 years. I just personally think that that's a natural part of being a founder is having to deal with those things. And if, having relationships with VCs and having these conversations on a regular basis is not something you want, then I don't think either you're the only founder for the project or product and you need to bring someone else who is more comfortable with those conversations, or that you should be a founder, because that is just a natural part of what you do. And so accept that or don't and deal with it accordingly.
Yeah, I certainly agree with that. Like, with Aidan, I had, only 3 to 5 conversations initially for fundraising. But then thereafter, all the bi-weekly calls, had nothing to do with fundraising. But we had, lots of exciting things to discuss. Yeah, I think, don't treat fundraising as a one-off thing. Don't treat it as just pen only. I think the process of discussing with potential shareholders and even now with DeFi, right, your potential users, I think that can be very helpful. But I think before we move on to the next topic, just within fundraising, I wanted to go a little deeper into this DAO first model because I think Ken rightly brought it up. I think there are certainly a lot of benefits for doing fundraising through that. As an investor, I'm also learning to adapt to it. Sometimes it took me a few months to close the equity round, all the back and forth, working with a few legal firms. And then suddenly there's this email just asking me to send money over. Sometimes I actually feel fortunate, it saved a lot of energy and effort for me from more useful things. I love that. But on the other hand, I have like a few questions, I guess, around these new models. Just wanted to hear your thoughts on this, as this is still a very new thing. The first thing is about credibility. I feel that if Aidan or Ken or Connor tomorrow wants to start a new project, they can surely get more than enough interest or commitments. Then they can choose whatever fundraising model they prefer, right? So basically they have a huge leverage because they have track record or credibility, things like that. But let's say for like new founders or founders who did some startups in the non-crypto space, but now are just entering the crypto space, I think sometimes if they don't give investors enough assurance, it could be a little hard for them to raise money, right? The DAO model basically, I think, doesn't give insurance much legal recourse.
Correct.
That's one
agreed.
thing I want to hear your thoughts on. How do we address this issue for new founders with a little bit of lack of track record? The second thing is certainly to prevent bad things from happening. All these rug pulls. If every single project in the space is doing the DAO model and then they do a rug pull, I think that's something devastating, right? How do we make sure that as a whole general ecosystem we can remain healthy? Yeah, just wanted to hear your thoughts. Maybe we should start from Kain, as you are probably the most experienced person in this model.
Yeah, so I think maybe starting from the rug pull idea, I'm a markets person, right? Like I believe that like over a long enough time horizon, the market will correct itself, right? Like people can do dumb things for a long time, but not forever. And so I think that we saw this with ICOs, right? Like, there were a lot of people that were over investing in ICOs. There was a lot of FOMO. And I had and I said this many times throughout 2016, 2017, I strongly believe that as a market, as an industry, we can fix these issues through market forces, right? Realistically. And I think we've seen that. We're not seeing the crazy raises that we saw, right? We're seeing much smaller raises. What we are seeing are different issues, obviously, right? There's different issues that have evolved, right? Now we're seeing rug pulls with, huge TVL where there's some incentive for people to put a bunch of money into a contract, and then there's a rug pull, which is a arguably worse outcome, right, than like an ICO that raises $150 million from VCs and then just disappears or doesn't do anything. But even those things I think are solvable, right? I think that there's things that we can do. I think that there are norms that will be established, and there's only so many times you can get rug pulled before you go, okay, I'm going to be more careful about what I do next time. So I think on the rug pull side, I think we can get better as a community about, contract security and governance and multi-sigs and all of the things that are out there, but so long as people are aping into anything that someone posts in a Telegram channel with an address, there's not much we can do, right? So we need to dial that back. I think that on the first question of like credibility, the easiest way to get credibility in the industry, I believe, is to participate and contribute to an existing project. Right, the people who have emerged out of other projects, and the Synthetix ecosystem, the Maker ecosystem, Aave to an extent as well. They've got these communities where there's people, they're participating, they're doing stuff. They start, and then they're talking to people, and they come up with an idea or something, and they go, "Oh, I've got this idea," and they've got people within that community that will vouch for them and can leverage their network, and you have this organic sort of growth. So if you come into the space with a clean slate and you don't know anyone, you are a risk, right? Like realistically, like people should be concerned about that. There's two ways you can mitigate that risk. One is smaller checks, right? If someone's raising a pre-seed round and they've got a track record outside of crypto and they raised 250 grand, okay, like that's not too bad, right? That's not too dangerous. If someone's turning up out of nowhere, no track record or anything, and they're raising a $10 million round, that's a bit more worrisome for me. So I think it's about sizing checks and sizing the investment to kind of de-risk as much as possible. I think those are the kind of two approaches that we need to solve those problems.
Yeah, agree with that. I think this sounds like a promising direction to go with, and we need to be comfortable with the risk. It's more about, I guess, finding ways to managing the risks systematically, dealing with the risks, rather than completely avoiding the risk, which is not very feasible in any case. Aidan and Connor, you guys have anything to add on to this for DAO first fundraising model?
Yeah, I think Kain kind of hit the nail on the head there. I mean, a lot of it is around reputation and like who you know and what you've already done in the space. That said, we're also seeing this kind of very interesting shift to like fully anonymous or like pseudonymous founders who are actually building a reputation and some type of track record, but without revealing their true identities, which I think is really cool to see. It kind of opens up a whole nother can of worms, but people are doing it and people are being successful. But yeah, I do agree. This kind of in many ways is a bit reflective of like the ICO craze of 2017, which like Kain said, there was all this like FOMO and all this hype around it, and then the bear market really kind of like filters out who are the real builders and who is just in it to make a quick buck. And we're seeing the same, I think, to a certain extent with DAOs and some of like the fundraising going on now, or the airdrops and the tokens and all that. But there's, I think, the ecosystem is more robust now, right? Where we can actually, have like on-chain vesting schedules and other things like that built into contracts that maybe reduce that liability and that reliance on trust. But that said, like with the rug pulls, people need to do a better job at doing due diligence about getting contracts audited, about really researching what they're getting into, because there's obviously ways people can just build a backdoor or like an admin address to control these things, and there's ways that you can kind of fully decentralize it and like remove that need for trust. So it goes both ways, and I think. I don't love the comparison to like the .com bubble, because I think that's a little bit worn out, but like it is kind of going to end up like that, where a lot of those ICOs and a lot of these DAOs will probably kind of like filter out into nothing, but you'll get a few unicorns and a few gems that come out of it, and it's just about finding the right ones.
Yeah, I think it's a process, right? I think it's a process for the entire space to standardize some of the checks and balances, as you mentioned. I also feel it's a process for us to realize again, sometimes human nature needs to be checked, and make sure that the community will go in the right direction. I think that's the process probably that's inevitable for us to mature. Aidan, you have anything to add on this topic?
Yeah, I mean, I guess one of the big things that I keep on seeing is that people think that DAOs replace traditional functions of an organization. And so something, I mean, I know I've heard from friends as well. I didn't realize how much work this would be, and I think it's important to remember that trustlessness doesn't remove the need for, trust in a system. It's supposed to enable trust without having that individual kind of trust, and rather codified human relationship through autonomous smart contracts. And I think we forget that. We think, oh, it's a DAO. That means it's cool and everything works. But, these are things we need to verify. And both on the investor and the user side of things, I think we're really seeing a lack of kind of utilizing these frameworks for what they really are, and instead looking at them as these band-aid solutions for things that, doesn't matter how many ways you invent kind of human ways to codify human relationship. You're always going to run into these issues if you're not building a community of people who are verifying these things, who are working together to solve problems. The problem is right now, though, is that everyone's trying to ape into everything, and they're not actually wanting to talk to other people about it because they're so worried to not get in early enough. And so there's this huge kind of competitiveness, and I definitely believe that, markets will prevail to a certain extent, but I think these asymmetrical kind of knowledge gaps in our current kind of market cycle will not, because it's almost like a monopoly on knowledge. And, it's not a state-run monopoly, but it's still a monopoly, and therefore is a degradation of the true free market. And so, what I'd love to see is people crowdsourcing the functions of venture capital, crowdsourcing the functions of reporting, and like on the financial side of things, operational and team side of things, and really looking at how a DAO can push forward the current functions of an organization, and not just be a way to make excuses for not acting as a legitimate organization. Because DAO or not, you still have a duty, whether it is legal or not, to the people who are participating in your kind of ideas that are now becoming their ideas. And so as a facilitator of something, I think there is a duty to ensure that, we're not taking shortcuts and rather empowering these new frameworks to truly legitimize the fact that we could have decentralized autonomous organizations in a legitimate way.
Right. I guess we are to use DAO as a tool rather than let's say worshiping DAO as a god, right? So as you said, it's not going to replace everything else in our life. Organizations, even sometimes, the human touch, right? We still want to see people, especially after COVID, I guess. We want to meet people. We want to just, hug each other sometimes when people are down. And sometimes these things are also very important, right? During our entrepreneurship. So we all have our ups and downs. So DAO will not be able to do that. And just as one example, I guess. Conan, I'm wondering, do we have any questions from the audience? Should we take any question there? Or
yeah, that's a good point. We have like 10 minutes left. I don't see any that have popped up, but if anyone out there you have questions, you can drop them in the chat or use like the Q&A feature. We'd be happy to get to those. We have like 10 minutes left, but while we're waiting there, I'll just add on to what Aidan's saying. I think what's interesting to me is like the definition of what is a DAO. Like everyone and everything is kind of trying to brand as a DAO today, and like I don't necessarily love the definition of autonomous because I don't think these things are autonomous. I think they take a lot of human and user input. And there's a bunch of different types of DAOs. There's like, fully on chain, governing DAOs. Then there's like projects that just release a governance token that do some snapshot votes and call it a DAO. And I think we need some better definitions around, what is a decentralized organization and how do they run and what are the mechanisms that work. And we're at Gitcoin, we're actually working with ChainSafe directly to help decentralize Gitcoin grants as a product. And we still have like a private company and then a DAO and we might start a foundation or create like a DAO of DAOs. And so there's still going to be some like legal structure around these things. But there's still a lot to learn on like, what, like how the power dynamic actually works and, how DAOs are actually structured. And I think a lot of projects are going through this right now. Like Maker, for example, I believe is dissolving their foundation. And so, yeah, there's a lot of really interesting moving parts to all of this.
And we're just so proud of that work too, because those are the things that I think will also be frameworks and flags for other people of how this is possible. And it's not just this opaque thing. And it, we'll be able to share the playbook with other people. And that playbook comes from somewhere, that's been capitalized. And now we can share
a lot
that
of pain and suffering as well.
yeah, that's most important.
Yeah.
Okay, I guess in the interest of time, since nobody posed any question, so I'll just ask one last question. What are the technologies or solutions that you are most looking forward to, so that aspiring founders in the space can go in and build it in the next few months, for example? Aidan, you want to start first this round?
Yeah, sure. I mean, I would personally love to see a lot more defined first steps for people getting into our space. A lot more accelerator models, incubator models, fellowship models. If it's a DAO first model, for that to be, a very clear and signaled kind of approach that can work. I want to see people being able to go from, dream ideation to real product much quicker and in a way that's as effective as the current kind of startup world, the traditional startup world. And that's where I think we really have the most work to do, is to really take people from step 1 to 100 or step 0 to 100 in as an efficient way as possible. Because I think that's where we're failing people, is not having just so many different programs for young founders. really take their ideas to the next level. And hackathons, I think, are really the best thing we have right now, to then lead to some of these other programs, which are great, that are out there. But just we need more of them and more of them and more of them.
Definitely. Yeah. And I'll just add to that quickly. I'm trying to kind of start to rebrand the Gitcoin Hackathons product as more of like virtual events, because we've done some incubation programs that are more like 6+ weeks long. We've done some bug bounty programs, and I think there's more to it than just hackathons. And quick plug, we also have the kernel program at Gitcoin, led by Vivek, who is like a longtime team member, which might actually be kind of doing its own DAO type structure in the long run. But they're essentially an accelerator as well for people who want to start new projects in the Web3 space. And that's really, one of our main goals is to support, the open source devs, new founders, and get them, the hardest part is getting from, 0 to 1 is getting a project started. And so that's something we really want to support at Gitcoin.
So this maybe doesn't answer the question directly, but just kind of riffing off what Connor said, I think one of the challenges that I see with new founders or even new people coming into the space who are interested and, maybe they've peeled like the first 2 layers of the onion off, is they oftentimes will get overly excited about something that for much deeper reasons doesn't make that much sense, right? Or like is just not going to be that viable. And I think that when you go to like a SaaS startup or something like that, right? You've got a business and you've got like a legacy service and you're going to, put it in the cloud and you're going to make the like UX better and whatever. Like it's kind of a model that I think we have really reasonable understanding. Like there's that kind of idea of how to turn a legacy service into a SaaS service is fairly embedded in startup culture and life, and there's a lot of great examples. What Aidan said is true. Like there's not a lot of examples, there's not a lot of pathways, there's not a lot of information. The only way that I think you can get that right now, if you are a founder, and it really behooves you to do this, is to deeply embed yourself in the space for as long as you can, rather than kind of turning up and then being like, oh, I've got this idea, I'm going to do this thing. Like 9 times out of 10, 99 times out of 10, like startups are hard enough, right? Like most fail, but 99 times out of 10, if you turned up 2 weeks ago and you think you've got a great idea for a decentralized, protocol, it's going to be garbage, to put it just in a very plain and transparent way, because they're just very weird, idiosyncratic challenges and trade-offs and restrictions in what you can do in this space that you're only really going to get if you deeply embed yourself. And that's why I always encourage people to participate in protocols, because that's one of the fastest ways to kind of upload that culture and that thought process and adversarial thinking and all of the different things that are really important that aren't kind of out there in the normal startup space. So if you have startup experience and you don't have deep crypto experience or DeFi experience, get in and like help out with the project and really try and go and work at a project for 6 months or something. Like it will put you in a much better place. It's sprint, right? Like you can get in there and kind of get that information and scale up and skill up and do all that stuff, and then be ready to go, okay, now I've got an idea, now I'm ready to run with it, and invariably it'll be a better outcome.
That's great advice. Well, guys, I think our time is up, and really thank you very much for sharing all the good thoughts and advice, and for making this time, right? I think it's pretty early in the morning for Aidan and pretty late night time for Kain. Thank you very much for that.
Yeah, thanks.
Connor,
thank you so much for having us.
No problem.
Yeah.
Connor, you have anything?
Thanks everyone for joining. I think that's pretty much it. I just dropped a couple links in the chat. I just wanted to note one more time that so there's like a day and a half left in the Grants Run 10 hackathon, which is kind of why we're here. I just want to thank IOSG for supporting us as a sponsor. They have 3 bounties up here that are pretty open-ended. So, if you're doing any projects around DeFi, NFTs, like you should check these out, see, because they could be a good fit. And of course, I just want to shout out the Kickstarter program that they've put together. They have a lot of information here on, how to start your startup. And just generally, I think there's a lot of great resources for people to check out and potential path to funding with IOSG. So check out those links I dropped. I also dropped in the YouTube recording link and stream if you missed any of this. So yeah, I think that's it. I want to thank everyone again for dropping in.
Thank you. Thanks, Connor.
Awesome. Thanks, everyone.
Awesome.
Have a great day.
See you guys.
Cheers, guys.
Or evening, I guess, Kain.
Yeah.
Yeah.
Xinshu.
Yeah.
See you.